This is the London Fintech Podcast, brought to you by your host, Mike Ballerman, bridging the worlds of suits and t-shirts, of finance and technology, bringing you insights, stories, and inspiration from the golden age of opportunity and innovation happening in London right now.
Hi, this is Mike Ballerman, and this is London Fintech Podcast, episode 87, brought to you in association with Synchron, Archover and Smart Pension. And I'm delighted to be joined today by Dr. Louise Bea, co-chair of Tech UK's Open Bank Working Group, sits on the government's Open Bank implementation entity, and is a strategic advisor to Sapient Razorfish. And we all discussed today open banking. We last looked into this topic a year ago in LFP087 with Paul Tamala of ACI Worldwide, who is a member of the Payments Strategy Forum. The fact that this episode is number 2 in the all-time list shows that, along with a mustn't-miss story about dinner with Ronnie and Nancy Reagan in a Baker Street pub, the drier but more influential topic of open banking is of widespread interest. Much changed in the meantime, so I thought it'd be good to revisit where we are, and who better than Louise, given her membership of all these various fora, and thus she is exposed to a whole range of views and opinions, as well as knowing what's really going on. I've taken to varying the length of these intros, and as I'm still recovering from the mammoth 10-minute intro to money and central bank digital cash a couple of episodes back, I'll take it easy for this one. So I'll spare you the long preamble. You've all heard about open banking by now, and if not, then briefly, all your banking data is now being seen as your data, not the bank's, and you can share it as you wish in order to check out, for example, getting a better service elsewhere. Last year, Paul dived into a lot of detail on what open banking in the UK is and what Europe's PSD2 actually is and where we're coming from. A year later, Louise can help us with the much more practical question of how the rubber is meeting the road. What's happening in practice? What are the threats? What are the opportunities? What are the key factors for success? And indeed, what is success? Is sharing your customers' data so well that you lose all your customers a success? Or as Tom Blomfield from Monzo has said many times, maybe banks are better off having poor APIs, i.e. mechanisms for sharing, so that not many customers leak out of the still pretty effective banking walls. Plenty to talk about, so let's get on with the show. Morning, Louise. Thanks for joining me today.
Morning.
So I always ask people something more interesting than financial services, and amazingly enough, some people struggle when I say something more interesting than financial services, because to some people, there is nothing more interesting than financial services, and it's always interesting to talk about something sort of relevant and pertinent to people's lives. So you suggested Satanism, which is a nice start, and certainly a unique one, actually. I think I've done rugby and fast cars too much. So yes, Satanism. Tell me about Satanism.
Personally, I don't practice Satanism, but I was chatting with my eldest stepson a couple of weeks ago and asked him what he'd been doing that day. And he makes documentaries, and he had been making one about Satanists in southeast London, who had been conducting, I don't know what you would call it, a meeting in their garden. And it involved an enormous amount of dressing up and incantations. They're very strongly feminist, which I wasn't expecting.
If I could just switch that round, I can misquote you terribly and say sort of feminists are associated with Satanism, but actually it's the other way around, you said.
I don't know how I feel about Satanism, but, great feminists. And I was saying to him, how do they explain this to the neighbours, given there's an awful lot of dressing up and larking about in the garden? And he said, well, they're very practical. They've said they're rehearsing for a play.
Very good. Yes, I wonder what kind of play. Well, strangely, I don't know much about Satanism myself, but one of the things that's always interested me, kind of from a biblical perspective, because as far as I am aware, Satan has something to do with the Bible, which is that actually that Satan doesn't really feature very much in the Bible as such, and not very much in the New Testament at all. And there's a very good book, which I came across a number of years ago, called Rivers of Blood or something like that. Some guy has gone through the entire Bible, and in a spreadsheet, literally, written it all down. And where God kills somebody, he's put the total in on one column. And where Satan kills someone, he's put the total in the other thing. And the fascinating thing, and this number rather depends on how many people you think the flood kills, and I think he put 20 million down for the flood, which obviously sort of God sent, is that according to the Bible, in the Bible's own words, God kills 22 million, including one of my favourite ones. He strikes a couple of boys dead in a bush for calling some priest baldy, a kind of punishment that I agree with, of course. Whereas actually Satan kills nobody in the Bible, rather fascinatingly, although there was a bet between God and Satan and 20 people died, so he split it sort of 10. So yes, it's very interesting. And talking about kids, actually, my younger daughter's finally finished her A-levels and is off to university to do English, and on her reading list was Milton's Paradise Lost, which is very big on the devil and Satan and Lucifer and all this kind of stuff. And as far as I'm aware, with my little knowledge of everything as usual, that a lot of this sort of satanic-y stuff is really a very sort of Middle Ages invention. I mean, Jesus didn't talk about it very much and didn't really feature in the Bible. So where can listeners, if they can at all, see your son's episode on Satanism, as well as a whole bunch of other stuff you said he was doing?
Yes, he's got an interesting and varied set of documentaries. I think you should look up the 10 questions you've always wanted to ask a Satanist, and that's where you'll find his broadcast.
Right, and he does a number of interesting topics as well.
He is very interested in conflict areas and very interested in sport as well. So opposing teams in Beirut he covered, cricket in Rwanda as a means of bringing people together after the conflicts in Rwanda, genocide in Rwanda.
Interesting. Well, we were talking on the way down that in a world of sort of tweeting and too much information on everything and mainstream media getting sort of somewhat dumbed down and not really diving into things very much, that actually it is creating a gap in the market for people who do deep content on interesting things such as you mentioned. You know, that's the kind of stuff I'd be very happy to have a look at, and if it's interesting, I'd stick with it, as opposed to the fact that I go home and there's virtually never anything on all the 99 TV channels that I have that I want to watch, actually.
Only 99?
Only 99, yes. I need to get the 100th one. Maybe that's it. So, coming back from Satanism and cricket in Beirut or Rwanda, I was looking, and amazingly enough, you were on the show 3 years ago in November, in episode 11, going about the lessons for Fintech and how it could grow. And actually, I looked back at your 5 lessons, and they were, with hindsight, very good ones. So in 3 years' time, hopefully, we'll look back on today's episode, and there'll be very good lessons as well. But time has gone by so much that it's possible for people, and you're a prime example, if not the best example, probably, that actually it's possible not just to have a job in fintech or a gig in fintech, but actually to have a career in fintech, do one thing and another thing and another thing in fintech. So the fintech careers are actually happening. So do you want to tell us briefly about your career and, you know, the sort of things you've learned along the way about fintech?
Well, over the course of a career which started in large technology firms, always at the sort of strategic business development. What do we need to be? What do we need to buy in order to become that? What do we need to be having in terms of propositions? How do we evolve to be relevant in the future, and how do we create a marketplace around us? I then set up my own company, and due to my frustration with the UK banking sector, which was fundamentally incapable of supporting a growing, highly profitable company with 7 or 8 of the world's largest blue chip clients as my customers, I thought, you know, this is ridiculous, and so ended up co-founding a fintech company that would actually support small businesses with the kind of finance that would help them. As a function of that, ended up selling that business entirely to the institutional
investor. Which is
investor.
Platform Black, where you were when you were last on the show.
And then selling that to the institutional investor who'd backed it from the beginning, GLI Finance. Working for GLI Finance on the institutional investor side. I'm also a personal investor in fintech companies, and I've worked hard to create regulation and legislation that would allow and support competition in financial services. And I'm now focused on open banking as a further example of an area which is going to drive competition in this space. And I guess you could count the number of people who've done all of those different things on one finger, and I'm probably it.
Yes, I think you're definitely it. So you won the competition. The interesting thing which has become more evident to people in fintech over the years is the nature of financial services itself. And the nature of financial services is that financial services is a social construct whose form has varied widely over space and time. And in a sense, it's something which is contained within this mould of regulation and legislation. And so it's interesting in terms of your career journey in fintech that actually you've ended up spending a lot of time on the interface between, as it were, fintech and FS, and this surround, these parameters, these boundary conditions which are set by regulation and legislation. And what drove you personally in that direction, or did it just kind of happen?
I would guess that it comes out of my utter frustration with the way that things are.
Well, the whole things? Like the whole world, or just a little bit of it?
Pretty much. I'm one of those people that can see a better way, that wants to change things, and often gets tarred with the disruptive label. And it's quite interesting. I went to the Disruption Summit. I was speaking at the Disruption Summit on Tuesday of this week. They'd identified me as one of these disruptors. Would I come along and talk about it? And it was quite interesting. One of the speakers there put up a list of 4 or 5 characteristics of disruptive people and how we like to think of ourselves: challenging, questioning, focused, excited about the future, and how other people see us: difficult, obsessive, bit strange.
Pain in the arse. A bit like how disruptive pupils are seen at school.
Yeah, absolutely.
When you were talking about that, I was thinking that, as you say, in the sort of modern world, in the fintechy world, and how FS is changing, that, disruptive is good, but actually, as a kid, being disruptive was bad.
Yeah, and one of the big conversations at this whole summit was, how do you cherish and nurture these people rather than constantly trying to shut them down, close them down, and limit them? And I was interested, when we were talking about regulation and legislation, you see those as boundaries. I see those as opportunities. That is why government, like the Competition and Markets Authority, the CMA, has that as a mechanism for enabling competition. Right. That is the really important thing. If you come at this with a traditional financial services mindset, that you are limited, these are boundaries, they are restrictions, you're missing the point.
Right, well, that's a very nice lead-in then to our main course of the realpolitik, of the rubber hitting the road in open banking. And like all change, there's 2 sides of the coin. One side is an opportunity, which is that actually this could actually help you do this, that, and the other. And the other side is a threat, which is actually on vice versa. Your business can suffer this way or that way, or you could be fined enormous sums of money. As we said, we covered all the sort of the regulation context last year, but one of the acronyms you were mentioning before struck me as a useful lead-in, which is the CMA 9. And I've vaguely heard of that, but not quite.
So Competition and Markets Authority named 9 banks in the UK who are covered by this regulation going forward. So all the banks that you would expect are covered by this. But the real point of this, don't get hung up about the banks. The banks are not the real point of this. The real point of this is it's being done for the benefit of consumers and for the benefit of small businesses. And the question is, how do we leverage data to drive innovation? Because the absolute joke is in the name: financial services. These are typically not services. The way banks have thought about the world for decades and centuries is bank first, product push, very protective data hoarding. They hide it, they hoard it, they never ever look at it, with a mass market, one-size-fits-all approach to their product, very siloed and very channel-led. So it's not a service, it's a big product push. Think about every other aspect of your life, your dating life, your gambling life, your shopping life, where you actually have access to services. So my point about why is open banking going to take off, nothing to do with regulation, nothing to do with technology, nothing to do with compliance, everything to do with people. We have been trained by receiving great services in every other aspect of our life over the last 10 to 15 years, enabled by technology, yes, which are lifestyle-led, which are customer-centric. And it is those organizations that are capable of being consumer or small business-centric, that are capable of providing preemptive, personalized services which will succeed in the open banking world.
Yes, I like that, and it's a good point you make that, for example, going back to the FSA, the Financial Services Authority, your point is well made that perhaps that should have been called the Financial Products Authority. And in terms of what's in a name, going back to your PhD in semiotics and signalling and all that kind of stuff, that would be a very interesting one in itself. And that if you form an organisation, call it Financial Services Authority, you kind of give it a one mentality. But if you call it Financial Products Authority, well, maybe it would have spent more time looking at the various products, these CDO squared and all this kind of stuff that were being stuffed out. So absolutely. Well, I'm very happy to sort of go on to how it's good for consumers and how it's good for SMEs and how the Competition Markets Authority and how the government is trying to improve the marketplace. But just before we sort of shoot past this CMA 9 point, so the 9 biggest banks that we will have heard of in the UK have got to do this. Just for the complete avoidance of doubt, does this mean that numbers 10, 11 down to 99 don't have to do it at all?
They're not captured under the CMA regulation.
Just on that point then, so just to take an example, I don't want to pick on Monzo, but let's pick on Monzo. So Monzo is a bank now. Is there some irony here, which is that only big banks have to do this open banking? The likes of Monzo can do closed banking. Other new banks are available.
Yes, so whether you're talking about Monzo, Starling, Atom, or any of the other new entrants to the banking market, If you look at the technology, their attitudes, their approaches to their customers, they're fairly fundamentally open anyway.
Yes, but are they not covered by the open banking regulation?
Stop worrying about the regulation. You're obsessing about the wrong point.
I always obsess about the wrong point. That's my whole life.
Yeah, it's your raison d'etre, your reason for being. No, the important point here is these banks think customer first. They're built on modern technology. They're providing services. Do they need to be told to do this by the Competition and Markets Authority? No, they'd be clinically insane not to be doing it anyway. This is about bringing the laggards into the present day, never mind the future. So my point is, if you're not doing this, it doesn't matter whether you're covered by the regulation or not, you should be. And not just treating it as a technology gig about being compliant, treating it as an opportunity to get first and foremost into the consumer and into the SME, providing services that they actually want, need, use.
Yes, I take that. I mean, you would have liked an event I went to last night, which was at Balderton Capital on InsurTech, and one of the points under debate was, do you need an insurance license to truly disrupt in InsurTech? And Stephen Mandel of Bought by Many, who was on the show a couple of years ago, said, look, forget, you would have liked this point, forget all this license stuff. Actually, what the most important thing you need to do to disrupt insurance is to take a customer-centric view of the world.
Absolutely.
Look after the customer, because that's radically different. So that is a very important spectrum to understand. And of course, the challenge will be for all these new ones, whether it's Bought by Many or whether it's Monzo or any of the other ones, which is that given the parameters of banking, etc., will it be possible to make profits by being customer-centric? We hope the answer is yes, but that remains to be seen. And one of the reasons that banks have become so product-centric is partly because they got so big, but also partly because it can be quite tricky making enough money.
So you're making a really good point about banks having historically made money by exploiting customers' inertia and fundamentally building highly profitable businesses out of product pushing, mass market products which are not optimized for any customer. So the big opportunity here is, are there organizations out there, and I believe there are, that can actually provide predictive, preemptive and personalized services which are to the very great benefit of the end consumer, whether that's an SME or an individual consumer, enabling, if this is what the consumer wishes, a profound level of inertia which has been trained into them by financial services over the decades, and be profitable. And if you look at the business models of the tech titans, whether you think that's Amazon, PayPal, Google, whoever, I think they've proved it is possible. But there's a profound change coming, and that change is, can banks make money out of services? Can they deliver services rather than products? And can they deliver those services which are predictive, preemptive and personalised and still make money? They need to change in order to do that.
Yes, it's an interesting way of looking at it because, of course, one tends to think of fintech as the impact of digital or technology upon banks. But in a way, what you're kind of saying, which is to take that the other way around, which is that actually the journey is as much as anything else about banks becoming more tech per se, as you say, like an Amazon or something like that, and vice versa. There are people out there and they're going to meet in the middle. So I buy your hypothesis, and it's certainly where the industry is going. We will all see whether this ends up being profitable or not. The problem, by and large, if you're providing services in general or financial advice, it's a good one with, for example, IFAs in the UK who advise people who wouldn't like this one, but because of all the regulation around them, it costs a hell of a lot to qualify as an IFA. It takes many years, about 5 years or something like that, to actually do all the things you're required to do. It's very hard for an IFA to sort of charge anybody less than 10 grand for anything, and people are always very reluctant to pay for advice. But that's just one small area, because actually things like a current account, for the sake of argument, isn't advice as such. So moving on then to making a success of this for consumers, for SMEs, for new businesses that's coming along, what do you think that the key areas, the key sort of battlegrounds to win on are?
Data is the absolute heart of this. It's the heart of the battle for relevance. If you think about, as I said, what banks have done with data historically, they've hidden it, they've hoarded it, and they've never ever looked at it. But it is the white gold of financial services. It's the white gold of services. And the nature of data in this market is changing. It's becoming open, Previously it was siloed, it was underutilised. Now it's going to be open and critically it's going to be accessible. Now customers will actually own their own data. Banks had historically thought of it as their data. Actually, my banking transaction data is mine. And that means you can imagine we're going to have increasing expectations about what it is that I can do with my data. And data, of course, in this market as in others, is becoming now real-time and dynamic because you can get at it and do things with it. So who's going to win? It's going to be the people that can harness that data in really smart ways, in really engaging, relevant, personalised ways that will become the main driver of that customer relationship in the future. What I'm talking about here is rather than this anachronistic product push, data hoarding, mass market, one-size-fits-all, siloed, channel-led, we're actually going to go, rather than being bank first, we're actually going to go to being life first, consumer first, small business first. So lifestyle-led, customer-centric, cooperative. Those organisations which are going to win are going to be those organisations that seek data, don't just donate it. No more data donors, actually going out there to seek data. So those banks that are looking at the open banking just as regulation, just as technology, just as something with which they have to be compliant, are basically saying, okay, I'm going to passively be some kind of data donor.
Yeah. Oh shit, we're screwed. We're going to have to give away all this information we keep in the past. That's a disaster. As you well point out, actually, that mentality is the disaster, not the having to share it. Because, as you say, there's actually more data, as it were, outside the moat of a bank in the rest of the world than there is within the moat and within the bank. And so it's a change of mentality. And taking your point about the lifestyle thing, I was reminded of John Kay when he was on the show, and from his book Masters of the Universal Servants of the People, talking about FS at large and flipping that round, he said that the great advantage for fintech in the broader sense, i.e. how financial services can change going forward, is the most unmet thing. And he said precisely what you're saying, coming at it from a very different perspective, which is that the unmet need is actually to take care of people's financial needs and requirements over their lifetime, rather than just to sell them this and then sell them that and then sell them
Absolutely.
the other.
Because that fundamentally is about being bank first rather than life first. And it's wrong. It's wrong in a world where services wrap around you and they flex to accommodate you, to the opportunity that you represent and to the risk that you represent. And the challenge for anybody who's grown up in that old school way of thinking is that incrementalism, it feels safe. It feels as if you can manage incremental change, but you can incrementally change and become utterly irrelevant really, really fast. Incrementalism is actually the riskiest strategy you could employ right now.
Yes, that's a good quote, isn't it? So basically we're facing a discontinuity there. As you say, the sort of CMA has picked out 9 banks. These 9 banks, as far as I hear, are certainly on the case. They spotted all this is going on. They're doing a pretty good job of it. We'll come back to see whether actually Tom's critique that actually they won't do such a good job of it, maybe.
No, hang on, you're saying they're doing a good job of it.
So to be clear, I don't actually know whether they're doing a good job of it. What I've heard anecdotally from people who know more than me, and you know more than most, so you can correct this, which is that, quotes, in the UK, the big banks are on the case, they're doing a decent job of it, whereas in Europe, and partly because different timescales and that kind of stuff, banks are further behind the curve with respect to PSD2 and all that kind of stuff. So that's the quote that I've heard. Now you can tell me whether that's right or wrong, fair or unfair.
As far as it goes, it's absolutely fine, because what you're actually saying there is the banks in the UK are participating, paying for and participating in the Open Bank implementation entity, and they will be compliant with regulation as that regulation date arrives. And there will be staggered deliverables, and will they make it through with a tech-first approach to compliance? Yes. But it depends whether or not you believe the change that we're talking about with open banking is regulation only, deliver the technology to become compliant, or if you actually see this as a fundamental change in the entire sector, which will open it up to the ultimate benefit of consumers and SMEs. If you're talking about strategy, and if you're talking about this being something with which there should be a profound strategic response in the boardrooms of each and every bank or organisation that wishes to take advantage of this change in the marketplace, then no.
Okay, so that's a very good and important distinction to draw. As you say, I mean, we're not disagreeing because both of these things can coexist. Banks have to comply with regulation one way or another, otherwise they end up in jail or shut down, which isn't really very good for business. However, that is a necessary, but you're pointing out very clearly, a necessary but not sufficient criterion for commercial success going forwards. If all, let's say, don't know what these banks are, so I'll pick a one random, bank number 5, whatever happens to be bank number 5 these days, if all bank number 5 is doing is basically bunging an API to mean that sort of consumers can get their data out and pass it on somewhere else, okay, they've complied with the regulation, but that doesn't necessarily mean they're going to be commercially successful. And as you very clearly said, if they just see themselves as leaking data in the way that you and I might see ourselves as leaking blood, that is going to weaken them over time. So one of the things here from a kind of perspective that harmonises both the tech but also the sort of the business and the cultural shifts you're talking about is the whole idea of open ecosystems. And as you say, the newer firms have started with a more open attitude in the first place. Banks, and I've been in there largely because they've got these huge, vast systems, some of which compiled COBOL code decades ago and no one even has the source code anymore, have a hell of a job keeping their own computers going as it is without exposing it externally just from a tech perspective. So let's just start with the simple stuff, because ecosystem is a word that we can all use and think we all mean the same thing, but it's one of those words where actually people might mean different things. So in the context of building open ecosystems, what is an ecosystem, Louise, to you?
Ecosystems are everything that coalesces around the data. So big statement, let me explain what I mean there. So if you're talking about this from a bank's perspective, and everything you've talked about this morning so far has been from the bank's perspective.
Yeah, that's because you're doing the consumer's perspective, you see. It'd be very boring if I just said the same thing as you all the time.
But it's not oppositional. Right, so yes, there's the customers, so consumers and small businesses. Yes, there's the retail banks. There's also the innovators. Now, whether you think that's fintech firms, whether you think it's the tech titans, huge ability to generate, consume, onboard data, great technology capability, and great customer engagement. We'll come back to that point, Mike. Whether you're talking about tech titans or fintechs as innovators, or whether you're talking about other companies that have enormous sources of data themselves, so energy companies, insurance companies, and beyond, mobile phone companies, health companies, huge sources of information themselves, huge perspectives on their customers and consumers. They can, of course, access this data as well with the consumer or small businesses' consent. So they're a huge part of the ecosystem. Yes, then there's the regulators, and critically, there are the shareholders. The shareholders are fundamentally important here because they're the people who hold the board to account.
In an ideal world, shareholders hold board to accounts, but that's a sort of a separate podcast in itself, how effectively they do it.
Badly, and in this instance, if they're not asking some pretty critical questions about what's going on, then the board isn't being held to account.
Absolutely. And so in terms of implementing this open ecosystem, obviously partnerships come into it because it becomes less of living in a castle, it becomes more of sort of dancing with a whole bunch of folks outside your moat. What kind of partnership models are you seeing at the moment?
Nothing that looks particularly adequate, I have to say. And I think that's because we have to think about partnering as being much more, and it sounds so trite, but partnerships of equals. Not, I'm the big bank, you're the tiny little fintech, or you're the tiny little whatever. It's actually got to be, no matter how unequal in size or scale those partnerships are, it actually needs to be partnerships rather than supplier relationships. So if you think about the kind of areas where you need partnering excellence, you need to be talking first about augmenting your data, augmenting the bank's data. So utilising customers' data, partners' customers' data to build pooled data sets. And you can think here about aggregated and anonymized data sets that would allow you to be able to generate entirely new propositions. So not how am I going to do mortgages, but actually propositions which undermet or unmet needs. That's absolutely critical. So that's the first thing, augmenting your own data. That's the first area of partnership. Second area of partnership is enabling the platform that you build. And this is pragmatic stuff about actually having things like, at its most basic, the data science skills that you need to enable analysis of big data. And if you look at the job specs put out by the big banks to look for data scientists, they're shocking. They're really, really poor, dull. Why would you, if you had the slightest bit of ambition, answer a job spec like that? Third area of partnering, anticipating needs. Actually, the ability to mine that data to proactively identify goals. So not just events as they happen, but aspirations And to be able to do that, you've actually got to have a relationship of trust, not just rational trust, but emotional trust. And when the banks have been talking about, yeah, but we've got great trust with our customers trust us. Rationally, yes, score highly for rational trust in the way that you would trust any utility. But emotional trust? No, they score really badly on that. Engagement, they score really badly on that. So if you're going to actually identify life aspirations or business aspirations, you need to have a relationship built on much more emotional levels of trust. There's also something about building new services and being able to genuinely co-create radically new services with innovators that address unmet or underserved needs. Not incremental product innovation, but actual services that meet unmet or underserved needs. And then finally, absolutely critically, you've got to own the moment where the customer's thinking about this, beginning to think about this. It's a bit about preempting. It's a bit about being proactive, about personalizing. And you've got to leverage a whole bunch of touch points, partner touch points, because you don't own your customer. They have many touch points. What you've got to be is in the places which are appropriate and relevant for that individual customer.
Excellent. Well, I certainly buy that, and listening to you talk, strategic was a word used before, but also it's kind of more of a marketing-driven perspective on it. And it did occur to me that maybe when you're on the show in 3 years' time again, what are the good jobs that you could do or you'd be hired to do? And this would be a reinterpretation of how these things work. Would actually to be a CTO for a bank, because I can see that a lot of this is attitudinal and cultural mentality shift within the bank rather than plugging the computers together. Now, without being rude about your ability to plug computers together, I'm sure you can, but if you were a CTO of a large bank, you'd hire people to plug the computers together and get the bits going down wires, that kind of technical stuff. But actually, it's much more, as you say, of a seismic shift in how the whole thing is conceived and perceived at the beginning, and what sets in slowly. And for those organisations that aren't getting attitude now, they'll probably be as strong in a year's time as they are now. But whether they'll be as strong in 10 years' time, they'll be weakening, and at that stage it'll be too late. So that makes a lot of sense to me. And in particular, in terms of the 4 varieties that you were explaining to me before of partnership model, I think there's sort of enhanced, unbundled, integrated, and bank as everyday partner, none of which made any sense to me whatsoever, being a very small brain. So maybe you can explain to me and the listeners these different models.
People will talk about the partnerships that they're undertaking in an effort to own the word partnership, but I think you've really got to drill down on these things. If all you're talking about is the channels you own and pushing your existing products and just enhancing it a teeny tiny bit. So an example here is HSBC's point partnership with Parity. That is enhanced, but it's your existing products shoved down your existing channels, the ones you own.
So model 1 is enhanced.
And model 2 I would describe as slightly unbundled. So it's your own products, it's existing channels, and some extended channels. And you could look at BBVA as an example of that. Or you could say, okay, I'm talking about my own channels, but I'm going to put innovative new services down these channels. So integrated, a sort of financial hub model, and Starling's an example of that. But I'm wondering if there's a model beyond all of these, where you're talking about accessing innovative services through extended channels. So I'm calling this the bank as an everyday partner. And this is where you take full advantage of the ecosystems to really reimagine financial services. So you're building an open platform, you become an everyday partner, you're identifying those unmet and underserved needs, and you're addressing them through predictive and personalized and preemptive services. And taken to its logical extent, this means really large-scale partnerships around the services that you could deliver. So whether it's pairing up with an energy company to create debt prevention propositions, identifying vulnerable customer propositions, life goal identification, whether it's demand-side management for domestic fuel consumers, for example, tailored tariffs are an obvious one. But think outside your own damn data. Think about who you're going to partner with. Think about those unmet and underserved needs that you could really, really help with.
Excellent. Well, that's very clear and very passionate, and I think quite accurate. And I think if I was an old-fashioned bank CTO listening to this, hello, old-fashioned bank CTOs listening to this, I'd be sitting there wondering how many years to my pension and whether I could survive without having to do any of this. Vice versa, if you're a younger, more middle-aged bank CTO, then this is absolutely something you'll be having to get with it on the basis that you won't be able to keep going to retirement without having undergone some of these attitudinal shifts. Before we wrap up the show, I'd like to thank all the listeners out there. I'd like to thank my brand partners for the podcast, Archover, secured peer-to-peer business lending, connecting businesses requiring finance with investors seeking a secure and favourable return of up to 9% per annum. Smart Pension, who are fast, secure and free. Check out their UK workplace pensions at autoenrolment.co.uk. Synchron, digital business consulting and technology services for top-tier FS. From start-up to 7,000 people, 18 countries and $400 million of revenue. So in terms of wrapping up and pulling all these things together, Louise, you wear a number of hats in the world. Moving on from the open banking per se, would you like to sort of throw some crumbs on the water for the 4,000 or so fishes out there who should listen to this and let them know who you can help in what way?
So I think really what I'm interested in is those companies that are keen to pilot and to scale the ecosystems that will make them successful. So how are they going to build partnerships? How are they going to do it with agility? And how are they going to know in an open bank environment that it's working? So if there's anyone out there who really does want to build the bridge of the Starship enterprise, to really know and understand their ecosystem, to improve and to sustain it in a way that it actually works for delivering genuine financial services, not products, that work for those end consumers and SMEs and make money, then get in touch.
Excellent. And then I should have asked this question before, and I'm not completely clear because there have been various mergers as there was on that. So very briefly, Publicis Sapient, do you want to just explain what they are? I had a look at the website and got a bit confused this morning.
So Publicis is a global organisation in the marketing, communications and technology space. It has a plethora of companies within the umbrella. So Publicis is a bit like WPP or Omnicom, but it has a very strong technology bent. And this is why I found them interesting when they approached me and said, would I come and be their strategic advisor around the whole space of open banking? The reason I said yes is because they combine this real understanding of the consumer, an ability to understand the consumer, to understand the customer, to think from that perspective, and to bring that together with genuinely interesting ability to imagine future propositions. And imagination is in really short supply. Human beings, they don't have so much of it. There are a small number of people in the world with an imagination. And the ability to imagine a future which doesn't exist is something that burns bright in Publicis. And then couple with that with technology capability to make it happen, I was persuaded, and I think I'm right, that they're a good place to be.
Oh, interesting. Well, I had wondered what the connection was between sort of the more advertising-y, marketing-y businesses and the tech business. But hearing you speak about this, I mean, it's been a bit like a stick of rock throughout, that in the way the economy is changing and the needs of everything is changing to be more customer-centric, then I can see that somebody who's bridging those two worlds of technology and of customer focus actually can bring things to the party that, for the sake of argument, you wouldn't just get if you hire a PR agency. I'm not saying the Publicis PR agency, but a PR agency and a tech firm to do stuff. It needs to be the intersection of these two things successfully that actually can transform organisations.
Absolutely. Well put.
So I wish you every success, and I wish Publicis Sapient every success in the future in helping make this happen. And I think the principal thing I've got out of this, which is that the compliance with regulation is a necessary but not sufficient criterion, and it's where banks need to start, but actually they need to go far beyond that. And I thank you for explaining it very clearly to our listeners. So I wish you every success in the future, Louise.
Thank you.
Thanks for listening. If you have consulting, advisory/non-exec or media needs in the FS or Fintech space, get in touch with me at mike@londonfintechpodcast.com.
We could sit in a bender all day, watching the firelight dance watching the firelight dance. We could walk in the mountains before dawn, watching a happy moonrise, watching a happy moonrise. Come away from the city, with the tarmac so dead and the people so sad. Come away from the city, with the faces so grey, with the pain of the everyday. We are wild like the mountains and the trees. Can you see what I mean? Can you see what I mean? We fit in between the earth and the sky. Kiss the city goodbye, wave the city goodbye, wave the city goodbye. The city goodbye. Watch the firelight dance with me. 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 Watch the firelight